You're watching TheoTrade. This is Don Kaufman. Here we are, August 30th, 2017. Let's get right to it. Markets strong on a relative basis. However, that depends what marketplace you happen to be looking at. We have an extremely unusual day that I'm going to kind of take you through here momentarily with the S&P futures. Forget point values for just a second. S&P futures are up about 0.37%. The Nasdaq futures exploding to the upside by a full percent. And the Dow futures, for the most part, they're unchanged on the trading day. And that's what we're looking at in terms of this comparison chart. Let me kind of label everything and take you into this because, you look at markets, you look at correlations for years, and you look at something like this and you got to think to yourself, something has got to give. On top over here happens to be the NQ futures. So these are the Nasdaq futures, again, up about 1%. Right here in the middle, those happen to be the S&P futures, and last but not least are the YMs. These are the Dow futures. The Dow futures are known as the YMs. Okay, look at the divergences in here, okay? What we're seeing on this trading day, again, highly unusual, and I'm going to point out specifically a number of unusual areas. And quite frankly, sometimes you come in here, got great explanations for it. This one, I've been talking about it to traders all over the industry throughout the course of the day. It's baffling many of us. And I'll show you exactly what I'm talking about. I mean, one of the first things I'm going to go to over here, this is the advanced decline line specifically. There's the closing bell. This is the advanced decline line for the Nasdaq 100. This is buy anything, okay, pretty much at any price. They're buying pretty much everything inside, ultimately, of the Nasdaq 100. Look, there's 94 advancers inside of the Nasdaq 100. Buy them, don't look back. I'll take you then into a little more detailed over here. Okay, so we've gone to the Nasdaq 100. Now let's look at the Dow. The Dow, okay, how did it finish the day? For the most part, 50-50. Right? Beating up what have been, if you think of this classical sense of blue chip stocks, there's no blue chip. We're only buying technology, beating up Verizon, beating up GE, beating up J&J. Again, it's this tale of like two different marketplaces. And if you think about your portfolio, it's probably caught somewhere in the middle of this. Last but not least, I'll bring up the S&P 100. Now, many of the S&P 100 underlyings, okay, are also found inside of the Nasdaq. So the advanced decline line in here, it's by no means stellar. Okay, we're seeing almost 70 advancers, 30 decliners over here, okay? But again, it's this tale of like literally looking at three markets that have totally bifurcated from one another. Again, the Nasdaq by 1%, the Dow futures totally flat, okay? Ironically, the Russell is caught somewhere between the Nasdaq and the S&Ps. Now, if that is not odd enough, and again, what do you make of this? Well, what you make of this is, for the most part, screams volumes. Portfolio managers right now are only willing to dive into Nasdaq stocks. But the irony of that is when we start looking at some of the Nasdaq stocks, okay, this doesn't exactly look like a rally, people. This looks like a bounce back that's going to be sold into. And that's the next point that I'm going to make over here is no matter where you look, the last two trading sessions, for instance, in Amazon, this has been a bounce trade. This is not, wild buying over there. Okay. If you take a look at Google, it's the exact same thing. Google, and I've been mentioning this day in and day out, Google is kind of dangling off the edge of a cliff. If it gets down to 920, well, it bounced towards the top of the channel over here. If you take a look at Apple today for most of the day was very, very weak on a relative basis, rallied towards the end of the day, rallied back up. But Apple was actually relatively flat on the day. You start looking at the Nasdaq and recognizing, the Nasdaq is only a stone's throw off of its all-time high, right? But we have Amazon, okay, on a percentage basis, and we'll take a look at Amazon here on a percentage basis. Amazon was up almost 45% year to date, okay, is barely sustaining 28% year to date. So again, over a 15% decline inside of Amazon. So Amazon is not pushing the Nasdaq to all-time highs. Google is not pushing the Nasdaq to all-time highs. Facebook was a little lackluster until ultimately today. Facebook did catch a nice bid today, but again, it's not pushing the Nasdaq to all-time highs. We can continue on here all day long. Yes, Microsoft is up there, but this breakout most recently inside of the Nasdaq, it's all about one underlying. It's about Apple. Okay, and Apple, again, was kind of weak on a relative basis. You also have to put in perspective now, what is there, nothing left to buy? Apple is up 40% year to date. Okay, it's now outperforming the Amazon. Okay, I say the Amazon because, hey, you know what? 3 weeks ago, that was the only thing anybody wanted to touch. The exact same thing is true of Google when Google was cresting, up in that range. But Google's only up 16% year to date. Now, back to some of the intraday trade. So I'm looking at some of this intraday trade, a little bit baffled here, talking to a couple of other traders. One of the things that really has kind of got us on edge happens to be, and again, I'm talking to, Jeff Bierman and Doc Severson and Tony Rago, okay, a couple of other traders that are in the volatility world. One thing that's really kind of got us on edge, and I'll just show you, adjust for futures contracts, hit apply, hit okay. The volatility futures were bid up, okay, just a few weeks ago, but they haven't backed off. And one of the things that's very, very difficult for me to try to interpret is why aren't the volatility futures falling? Okay, so again, we have markets that have rallied. The S&Ps are rallying, right? The Nasdaq is rallying. Okay, the Dow stocks are not rallying over there. Shouldn't the volatility futures be dropping back at least to the 12 region? Maybe even the 11 region, okay? They're not. Somehow, some way, volatility still perceives there to be risk, okay? If that wasn't true, how come they didn't drop the volatility futures even in today's trading session? And for those of you that look at this product on a day-to-day basis, you're going to sit there and kind of scratch your head. Why? When the S&P futures are up 10, more often than not, the volatility futures are down anywhere from 30 to 40 cents. Even when they're at 13, okay, you would expect a fairly substantial drop in volatility. In addition to it, the bonds. Now, the bonds today, right, they have rolled forward to a new contract, and I'm going to go in here and I'm going to show you under futures, okay, adjust for contract changes, hit apply, hit okay. The bonds have rolled forward, but the bonds are still picking up steam to the upside here, okay? That has not impacted the financials. On top of it, again, this is just a day filled, if you will, with oddities. And again, there's times where, as a trader, you can't explain per se what you're seeing on the screen, but you know that these correlations, okay, have held kind of steadfast for decades. And when you see bonds this strong, I mean, ultimately what bonds this strong means, okay, if you take a look at TNX, this is the interest rate associated with the 10-year, okay? What have interest rates done? They're just getting crushed, okay? Today, they just held their own, all right? They formed the infamous Doji Star. It's a Doji Star candle. But the interest rates have been doing nothing but getting crushed. Shouldn't that negatively impact, okay, some of the financials? And again, some of you are going to say, well, regulations are coming off financials. Again, a lot of it excuses. In the end, financials have always been an arbitrage, a relationship, okay, to what the 10-year Treasury index is doing. And the interest rates have done nothing but go down. We're sitting here, again, at 2.1%. Again, the way this translates, that's 2.1% on 10 years. You could go tie up your money right now and get yourself 2.1%. Now, why is that odd today? Because GDP came out this morning, all right? GDP comes out, and it was a revised number. Instead of being, the 2.7%, they revised it up to 3%, which ultimately means, and it kind of deems the economy a little bit stronger than anybody anticipated. That should mean that the Fed is going to step in and do what? Raise interest rates, yeah? Really, I don't think the market's agreeing right now, okay? Everywhere you look in this marketplace today, okay, correlations, they're bifurcated. Stuff that trades in relative tandem is ultimately split apart, okay? Look for some kind of wild and woolly moves here in the coming days. Look for things like advanced decline line to snap back into alignment. With that, I want to thank everybody for joining us at TheoTrade. Have a wonderful evening. Bye-bye.